All right, welcome back. In this first part, I'm going to talk a little bit about what is this program all about. Remember, this is part of this introductory live webinar. Today is November 26th, 2016, and this is the 5th edition of the coaching program. Now, if you ask me what is this program, this is a high level, high quality, practical, very, very practical. We are going to go through charts. We are going to analyze charts before and after the fact. Before the fact is very important because we need to analyze the chart to decide what we're going to do next. And you will be that there will be a big focus from myself on the hard right edge, which is the right edge of the charts, because all the analysis we do is needed to take decision for what's coming next. The program is in 8 modules, plus there are 4 additional modules on profitability and consistency, and it's delivered in 3 phases. It is a total of 12 months, and during this period, as you know, you will also have access to the FibStalker trading signal service, which you can use in 2 ways. You can use to actually take the signals and profit, and you can also use it to see how the analysis is being performed before the fact, applying the concepts that you're going to learn in the program. Okay, so it serves 2 purposes for you. So the program in a nutshell, what is this about? It's about exploiting effects of certain classes of algorithms, and now we're not talking about the high frequency trading algorithms, but a class of algorithms that was derived by the program trading algos of the 80s. These algorithms are very powerful, and they are present in all the time frames of high volume markets. This is a very key sentence here: high volume market. Anything I'm going to say in my coaching program and these webinars applies to high volume markets. If you try to apply this to small cap or small volume stocks, for example, is not going to work. And here are some of the markets you can apply this to: Forex equity index, some equity index, not all of them; Forex futures, all of them; commodity like gold and silver; and high volume stocks. Think of the SP 100 or the Nasdaq 100 stocks. Okay, these algorithms will allow us identifying levels where there is a high anticipated participation. Remember, the key word here is it's anticipated. It's not sure that it's going to come. And the point is that we will have mechanisms to test that, and in fact, algos can also be leveraged on a smaller time frame, and will allow us to create a procedural timing technique. Procedural is the key here. That's something that you don't find anywhere. And I know that these are bold statements, but you will see throughout the course. And I call this fib stalking. Again, I'm going to tell more about that. And I'll show an example in part 7 as well. And the fib stalking allows us to test those levels of anticipated participation from algorithms. So as you can see here, there are 2 concepts or 2 different moments here. One is to identify what are these anticipated areas, and the second is to time this anticipated area using the fib stalking timing. Okay, so that's in a nutshell what it is. What is this based upon? Now, considering that the fractal behavior of price, which means that price has the same shape, same behavior on all time frames, the methods can be used by both swing and day traders. Swing traders will focus on the higher time frame, weekly, daily, 4 hour, and the day traders will focus on the smaller time frame, daily, 4 hour and 15 minutes. So what is this program about? Why you should be listening to me, and where I got this information? It's a mix of techniques learned by actively trading, as well as working with mentors like Van Tarp, particularly David Asley, fantastic trader, and a number of other trader or mentors like D.R. Barton and Ivica Juracic. But I also have had inputs from other traders. The methodology was improved through my own trading and research. As I mentioned before, I'm a certified market technician, but this is not really important. What is important is the time that I spent on charts. It's not the qualification. The Master in Finance has not helped one bit to improve my trading. And the research, on the other hand, that I did for the International Federation of Tech Analysis is something that helped me a lot. There are a number of areas that are touched by the program. It's not only the mechanics of trading, which are, for example, the measure moves, the way we model the effects of algorithms on price, and those areas of anticipated participation. We talk, and I talk a lot about money and risk management techniques, particularly risk management is trader's job number one. So you will hear me speaking a lot about it. And I will also do an adaptation to swing trading. We'll talk about patterns and proprietary patterns, type of entries, ways of increasing profits with money management, and so on. There is really, really a lot. Now, there are two main groups of traders we're going to track: the smart money and the dump money. And before I continue, I have a couple of questions there. When method is applicable to all time frame, which is more effective optimal outcome in terms of reward to risk? Drawdown realized gains, trading one pair multiple time frame setup, or trading multiple pair high time frame? So the very good question there, Danny. So in terms of reward to risk, the move that will be originated on the weekly and daily will be always the ones who have the highest reward to risk. The point is always where you do the timing. The general rule is if you identify an opportunity on a time frame T, you go to time frame T minus 1 and you do the timing. So for example, if you identify the opportunity on the daily time frame, you go down to the 4 hour and you do the timing there. However, there are ways to scale down from the 4 hour to the 15 minutes. So the beauty here is that you're now looking at a daily opportunity, but you do the timing not on the 4 hour, but you do it on the 15 minutes. And obviously, if you're able to do successful timing on the 15 minutes of a daily opportunity, your reward to risk spikes up. All right. So generally, the larger the time frame, the better the reward to risk. If you are able to time it on small time frame, and I'll show you a methodology to do that. Okay. We will discuss that when we talk about the FibStalker timing, module 3 and 4. I hope that answered the question. Very good. All right, so we're saying there are two groups of traders, smart and dump money. The smart money, who are they? They know what they're doing. Large banks, professional traders, program trading, and the classes of algorithm that we study. All right, I call them smart money. Compare that to dump money. These are the traditional technical analysis crowd, the trend following crowd. Now, trend following works, but it also gives back a lot of gains. Discretionary trading, people who believe that they can trade the market discretionary, and also there is a group called don't have a clue, but being a trader is very cool. So just joking here, but what I mean is that, see, there are a lot of people who still believe that they read about tech analysis on a book and that will make them successful. In fact, a lot of people have a lot of hopes in traditional tech analysis, and I say that being national board director for the Canadian Society of Tech Analysis. So that's if I say that, it means that there has to be something wrong. Of course, it's not about me. It's what about I've realized about traditional tech analysis. And so when we know that there are two groups, smart and dump money, we also need to understand that they act and will affect the market in different ways. For example, first of all, they do not lose or win at all times. Sometimes dump money right, sometimes it's smart money right. The point is that you will observe, and I'll show you on the charts, that smart money always initiates and leads market moves. It is smart money doing that. It's not dump money. What dump money does, it actually obstacles price or follows, so in a way lags the decisions made by the smart money. So either it's wrong, being of obstacle, or it's late, following what smart money is actually doing. So in the program, I will help you and lead you to learn how to recognize and model these two groups, smart money and dump money, and also how to predict and test the prediction. So see, we're not in the business of prediction, we're in the business of making money. And so it's not that if we predict that there is a level that is going to show participation for smart money, we just blindly buy it or sell it, depending if it's a long or a short. No, all the time you're going to test, and so this is part of the activity, and we'll do it for smart and dump money, and we'll study how they are going to affect market price. Okay, so these are two groups. You will hear me a lot talking about these two groups. The algos and our focus of the coaching program will be mainly on the smart money. However, at the beginning of the program, I will also talk about dump money, and we will create, I will give you very early in the program a trading system that uses both smart and dump money. Okay, so you can start actually looking at the market, studying the market, even using that trading system to trade the market. Okay, so these are my beliefs. I believe that in order to win in this game, the trading game, we ought to stalk the smart money. We need to understand what the smart money is doing, and as soon as possible, align our trades with what they are doing. And the key word here is stalk, and this actually probably suggests you why I picked as my nickname FibStalker. Okay, so I am a stalker of the smart money. I don't stalk people, I stalk smart money, and I do this with an unconventional way of using Fibonacci, which is the results of what I observed trading with my mentors, plus the results of my studies. Okay, and so we all have to become stalkers in a way. Of course, if you embrace, as I hope you do, you will do the material in the coaching program. And always remember always that smart money initiates and leads, and dumb money obstacles and follows. Okay, if you remember this, you debunked half of the complexity that there is in the market. The other half is the bandwagon theory, which we're going to look at later on. All right, so let's look at very briefly the major benefits that you will have by following the coaching program. First of all, we are going to trade differently, and would be in line with what smart and dump money is doing. We won't have models that are not grounded in the market. Our models are grounded in the way the market works. You will learn to mechanically time levels participated by algos, and before you can time something, you have to know where those levels are, and those levels are given by the analysis of price structure analysis of algorithms. You remove any second guessing, discretionary activity, and you will reduce the effect of lack of discipline. Why? Because I'm going to give you a trading system, I'm going to give you procedures and a process to follow to analyze the market properly. So this is hard work, guys. It is hard work to learn it, especially if you come from a different mindset, a different way of looking at the market. And it's hard work to learn it the first time. But once you have learned it, as I'm going to show you in part 7, your analysis is going to be fluid, easy, straightforward, and you will follow a process in like as a second nature, really, and you will know that process will lead you to, more often than not, to right decisions. You will apply the reduced and free risk trading techniques. I'm big, huge about risk, meaning that it's very important for me, risk management. And in fact, I believe that once you have managed risk, you have completed your job as a trader. All the rest is just waiting whether the market goes in your direction and you book a profit, or goes against you and you manage your risk and you're still in the game. So we'll apply concepts to play the trading game and win in defense. Again, risk management is key here. You will learn to identify price structure on all time frame. What is price structure? Price structure is the a representation of the participation of algorithms on all time frames that tells you what price is doing and what price can do. And in fact, we use this analysis information to give input into another sub process that it's called price discovery, to anticipate what algos and Dampan are going to do next. And we use this information to create trading plans that have a higher probability of working. You will understand all the components of the FibStalker methods, and there are several of them, and I will help you personalize the methods on your need based on your time frames. Do you look at the market 8 hours a day, or do you look at the market only on the 4-hour time frame twice a day? Would you want to look at the market at the end of the day? Of course, each and every of this possibility leads to a different way of trading, a different trading system, and also different expectations. Because if you trade only on the daily time frame, probably you have to lower a little bit your expectations. You still do well in the trading signal service. We mainly trade on the daily to allow everybody, also people who have a job, to actually take advantage of opportunities. Okay, so I'll help you to do that and tweak your trading plan as well. You will also learn how to reach trading objectives through risk and money management as well. See, a lot of people believe that in order to make money, they have to risk 5%, 10% of their portfolio. And most of these people, in the end, they don't even know how much they are risking. The reality is that you don't have to do that. I'll ask you to risk 1% of your portfolio. And then when you will be proficient, we're going to use Money Manager to increase that, to increase the gains that you can get from risking more money and other people's money, which is market money that you made from your gains, to increase your profits. All right, how the program is organized then. Since inception, which was again October 2014, this program has changed slightly. And the reason why I change it is that I want to get and maximize the interaction during these live webinars. I want you to ask questions. Okay, so for this reason, I have actually split the program in 3 parts. There's a first part which is a self-study. So there are over 160 hours of material, which is studied in a way, it's made in a way that reinforces itself. So there is the original material, then there is the Q&A, and then there is the review material. I want you to study and go through the material before we actually do the live webinar, so you will come with a better understanding and you maximize what you take out of the webinar as well. The core will be active reviews like this one, so be live reviews, Q&A, and I'll assign you homeworks as well. And in fact, today I'm going to assign you the first homework. So it's you have to have an active participation. It's not a passive participation. Okay. You'll also have the opportunity to do a one-on-one with me of 1 hour, where we discuss your level of development, next steps, and you can do this twice during the program. That's a dedicated one-on-one, so it's me and you can ask all the questions, you can submit everything. And of course, there will be the forum and the email as well. The third part is consolidation. When we complete the core, then we will keep working on producing profitability and consistency. I'll give you additional tools to work with your psychology as well, and you will understand why that is so important. Throughout the 12 months, you will have access to the trading signal service, which will end November 2017, and at the time, by the time most of the students I have, I shouldn't say most, 40% of the students I have, they are completely independent. There is a 30% that keeps working with me and keeps improving, and then there is a 30% that's a fact of life who have either they don't put the work, the effort on it, either they have such strong conviction about how the market should work, they never are able to fully realize the benefits of the program. So that's something that you have to know as well. All right. All right, so if you need a broker or you need a demo account during the learning, I strongly suggest you get a demo account. You don't have to get it from Pepperstone, but if you want, um, it's a very good broker. I use it as well for some of my accounts. If you want to open an account, you can use MT4 and CTrader. And if you want to open an account, you can follow this link here. As of today, I have been reported that they suspended opening accounts for Canadians. I don't know the reason, so I'm going to investigate that. I learned that yesterday. But any other broker anyway will work if you want to demo trade, as I suggest you do at the very beginning. And when it comes to Pepperstone, you can anyway find more information on pepperstone.com English, or write to me for more information. As I mentioned, this might not be an option any longer. And if it's not, please, I mean, there are other brokers you can use. The tools, as I mentioned, I'm not going to use any kind of indicators of any sorts, any kind of other tech analysis studies. I'm not choosing Ikimoku. I'm not choosing RSIs. And you name it. Uh, MACD and so on. I don't use that stuff. I mean, I said that in the past. I don't use it. The only TA study that you will need is some Fibonacci retracement to model algorithms. I say some because I don't even use all of the levels. I only use 4 levels, okay, of Fibonacci. And you will see how in module 1 how I use them. The other tool is the 13 and 26 EMA, exponential moving averages, which you find in any package to model dump money. All right. So if you're using MT4 platform, you have two options. There's a students of mine, Peter T. Lee, who has developed the FibStalker tool, and it costs $25, and all the business goes to Kiva.org, which, as you know, it's an organization, non-profit organization that helps commercial development of the world country. So it's a control code, and if there is anything, he can always change. There's another adjustable, where there are many of them, adjustable Fibonacci MT4 tool, which is distributed for free on Forex Factory, and you can look at that. The only thing is that we do not control the code directly. So if I ask Peter to make a change, he will do it. If we use this other one, there's no way we can affect that. So you can ask me for more information. Okay, so, and this concludes part 1 of this first webinar. Thanks for watching.